Alright everyone, and welcome back to the channel for another Bitcoin update. So in today's episode, I'm going to talk about why I think Bitcoin is about to be subject to an explosive move. We're going to be talking about what direction is it going to be going in, what are my price targets, the FOMC fractals we've previously talked about, failed move fractal out of the bear flag, everything from the oscillators, moving averages. We're going to be talking about MFI fractals, Nasdaq, things we haven't talked about before, the VIX in correlation to the SPY, of course, the SPY, stock market indices, all of this and more. Let's jump right into today's video. So super quickly before we do jump into the first chart, I would just like to say that I have timestamped every single one of these charts, every one of these segments for your ease of use while navigating the video. I do highly recommend that you stick around for the entirety of the video, but if you are interested in something like the VIX, if you think that the MFI fractal seems interesting and you're pressed for time, these are why the timestamps are there. So with that being said, let's jump into our first segment. This is going to be on the previous FOMC dates. If you're a veteran of the channel, you would have seen this chart before. It's very easy to understand. The white line with the red arrows pointing towards it is the date that the FOMC meetings were. Within each of these, we had negative news, meaning that the Fed raised the interest rate. So for example, back here on the 16th of March, then on the 4th of May, on the 15th of June and the 27th of July, we collectively had negative interest rates throughout the entirety of these, and we had bearish news and we pumped into it, and then we started to head back down after it. And you can see this was where the date was, and then by the time you had the next FOMC meeting, you were actually lower than when this initially started. So if we remove this, you can see the next meeting that we had, we were lower than the original price. So you pump into the bearish news, you break down after it, and then you pump on the day of the bearish news, break down after it, make a new low. It seemed like this was a slight deviation from the trend where you massively headed down into this. In my opinion, this is because these most recent FOMC meetings with the interest rates being raised, they were priced into the market. I feel like everyone kind of knew this was coming. I don't feel like the GDP, the negative GDP was priced in, but nonetheless, what you can see is the same fractal playing out over here with the FOMC dates. You pumped on the day of the bearish news, and then you broke back down, and just like you've done every other time, you've come down and made a new low since when the trend initially started. And then what have you got over here? You pumped into this, and then on the day of the bearish news on the 27th of July, you pumped into the price, and now it looks like we're starting to head to the downside. Even if we head back to the basics, remove everything that we've got on our chart, look at the daily time frame Heikenarchis, for the first day today, we've started to head back down on the Heikenarchis. So it looks like this is a clear wrap where we're going to be starting to head down very quickly. Like I said, got a lot to talk about today, so I'm going to quick fire through these charts. Let's head on to this chart over here, where we're going to be talking about the failed move fractal. Now, yes, we are in a bear flag for this. This has something to do with the failed move. So while I wouldn't like you to pay too much attention to the bear flag, you can obviously see we've got a pole to the downside, and then this is what I want you to focus on. This massive channel is what is important, because with this channel, you can draw this a few ways, especially from the first few touch points. I've readjusted this or retroactively fit this, but what you can actually see, this actually looks like a pretty good fit because it encompassed this data point. But nonetheless, this is how I originally had it drawn, and you can see we had a brutal failed move. And what happens when you have a failed move? As I always say on my channel, a failed move equals a fast move in the opposite direction. What does this mean? Well, on the daily time frame, you tried to break to the downside of this bear flag. You can even see on the 4 hour, we only had a wick. Like, we didn't spend any time beneath here. We had a very quick liquidity grab. We headed to the downside, and then we immediately pinged back up. This is a failed move equals a fast move in the opposite direction. And very quickly, we headed up 28.6%. A massive failed move equals a fast move in the opposite direction, which was good for the bulls. But now we're having repeat fractals of this failed move outside of this bear flag. Now, quite recently, on the 20th of July, you can see we tried to head above this bear flag again, and there's many ways you can draw this. I've seen people draw these data points over here, and then even when you draw that, you can see that we've had a failed move over here. I've seen people specifically draw these data points, but there's really no way that you can draw this without saying, you know, that we had a failed move outside the top of this. I mean, even if you put a horizontal ray to these massive peaks over here, you can very clearly see you've got a double top failed move above this. And as always, my friends, failed move equals a fast move in the opposite direction. What did you do the second to last time you had a failed move above the top of this bear flag? You had a 15% correction. What have we done so far since we've had a failed move outside this flag? We're only down 7%. So in my opinion, we're going to be magnetized to lower price targets. I've talked about my price targets looking, I'm specifically only going to pull up the VPVR, but we've also talked about the fixed volume profiles, and this is the biggest cluster in correlation to the fixed volume profiles, which I won't show you because it will take up too much time. But you can more or less see, you know, over on the VPVR, this confirms that this is where the next major cluster is, and it's down here at 21,200 all the way down to 20,200. Now, if we do go down to this next cluster to the downside, even if we go down today, which is the optimal time to go down, because the longer you take to go to the downside of this, the more brutal the capitulation outside the bear flag is going to be. So for example, if you take like another couple of weeks to do this, a couple of months, you might end up having a very nasty move to the downside, and that's going to allow a lot of momentum to start shifting down. But once again, we've had two failed moves to the upside, and just like we had a failed move to the downside, and this caused a massive fast move to the upside, I think these failed moves above the top of this bear flag are going to be potentially equally as brutal, and I at least think that we're going to head back down to the bottom of this bear flag in the immediate short term. So that is my first price target for you, my friends. I think we're heading down to between the ranges of 21,200, 21,000, and then potentially the next volume clusters down here at around about 20,000. So moving on from the failed move fractal, let's talk about the oscillators. Starting off with the higher time frames, you can see the MFI, or sorry, not the MFI, the MACD on the weekly time frame has started to head up bullish. Now, what I would like to say is, while both the MFI and the MACD are bullish, in terms of the momentum indicators, we'll be using the MACD and the squeeze momentum indicator. The squeeze momentum indicator has yet to flip bullish, and I much prefer looking at the squeeze mom. You'll see why. Let me explain this. If you're a veteran of the channel also, you would have heard me explain this many times before, but just quickly, look at the weekly time frame for the squeeze mom. You can see very clear uptrends, very clear downtrends, very clear uptrends, very clear downtrends. But then you head over to the MACD, and you can see, you know, there's times like here where you've got a fake out. I think this is going to be a fake out, but nonetheless, we don't know yet. You had a fake out here. This was saying, hey, MACD's flipping bearish. And as you can see, we went on a crazy bull run. We had many times over here where you flip bullish, which was a fake out, then you flip bearish, which was a fake out, then you flip bullish before having another fake out to the downside. And you can see time after time again, the MACD on the weekly time frame is not my favorite indicator. So while I will mention it, even though it goes against kind of what I think is going to be going out, I do always like to talk about, you know, other indicators which are in negative correlation to what I think is going to be going on. I don't just want to say, you know, this is my narrative and I'll only show things in my narrative. If there's something bullish to talk about, even if I don't think it's going to play out, even if I'm not a fan of it, I will mention it. So MACD weekly time frame, MFI weekly time frame are heading up very strongly. However, my favorite two indicators on here are the MFI and the squeeze mom. MFI is bullish, squeeze mom is bearish. So for the higher time frames, I would be remaining neutral, just based on the oscillators. Now, heading over to the daily time frame, you can see a slightly different picture. On the daily time frame, the MACD is starting to head to the downside, and the daily MACD is pretty good at calling these big moves up, big moves down, and it's also pretty good on the 4 hour. But you can see the MACD has been heading up very strongly. We're passing the heart line now. We've already passed it. The histogram bars are starting to head down on the daily. It looks like in the next couple of days we're going to see a bearish cross on this. The MFI, I'm specifically going to talk about this on the daily time frame in the MFI Fractal. So I'll only be talking about the 4 hourly MFI from here on out. But the squeeze mom on the daily time frame is also heading down on the oscillators. So this is really interesting, because like I said, it's not too often that you do see these fake outs over on the squeeze mom. You can actually see quite recently you've had quite a few fake outs, which is very Not normally how this works. You know, for example, we've really kind of just been chopping up, down, up, down, up, down, which is understandable why some of these are faking out, but nonetheless, doesn't happen too often. If we head down to the lower time frames, you can see that the MACD is heading down very, very bearish at this moment in time. The MFI rocketing to the downside, a little bit more room to go to the downside. MFI has got a lot more room to go down. Squeeze momentum indicator on the 4-hourly time frame is also heading down with a lot of room to the downside. Once again, if you do watch this channel, you will know that I really don't like looking at the 1-hourly time frame, not really my style. So I won't be commenting on that, but looking at the range of different time frames that we've talked about, higher time frames, even though I'm in disagreement with the fact that this is neutral, my favorite indicators on here are collectively neutral, so this is what it is. Daily time frame is bearish, 4-hourly time frame is bearish, pretty much every other time frame I imagine will be bearish. Let's move on to your moving averages. Now, first of all, let's clear up the chart and let's pull up all of these zones, head down to the lower time frames, 4-hourly. Let me make sure the 13 EMA is on the daily and now not moving over to the 4-hourly. And what I want to show you is this. Before I talk about the tightening, we are within a very, very thin range at this moment in time in terms of the moving averages. They're all converging and the top of the EMA ribbons are currently coming in at 20. On the daily time frame, it's actually up here, so let me move it up to here, and then on the bottom you would have the daily EMA ribbons right down here. But on the 4-hour, once again taking into consideration we're now looking at the 4-hourly EMA ribbons, but this is where the top and the bottom is. You've got a very, very tight range between 23,500 and 22,500, so you've got a $1,000 region where Bitcoin is basically free to trade. Now, we are basically getting very, very heavily converged in terms of our moving averages at this moment in time. If we zoom out once again, I want to make sure I don't lose this. On the daily time frame, you can see we are right in the heart line of the EMA ribbons right now. If we head down to the lower time frames, you can currently see that we are falling below the 4-hourly EMA ribbons, but we're coming down to our most important moving average of all. We haven't had a successful retest of this in a very, very long time. So if you are a bull, I'm personally not a bull in the short term, but if I was a bull, I'd really, really be hoping this 200-week moving average holds. I think 22,800 would absolutely need to hold. You'd want to have a strong move to the upside after that, because Bitcoin's already looking pretty shaky right now, so take that into consideration as well. Pulling back up the chart so we can get the 13 EMA daily time frame. You can see we're also sitting on this right as well. So the 13 EMA and the 200 week are all perfectly aligning. 200 week is a very, very nice indicator at cooling. You know, when you're about to dive off a cliff, it's pretty much useless when you're trending sideways, which is why you've seen quite a few fake outs on the 13 EMA recently. But a lot of the time, what you will notice is the 13 EMA is one of the first moving averages to call for a major, major capitulation. And we're heading down to it now. We're heading down to it very, very strongly. So let's see how we react to this moving average. This is one of my favorites for short-term price predictions. Once again, sitting on the 200-week moving average, this is very, very important. We've tried to move above this 2 times now. This is the 3rd time. You know, you can see over here, you broke to the downside of it. We pumped back to the upside. You surpassed the 200-week moving average. Everyone got out of bed. Everyone was so bullish. We came back down for the back test. We failed. I'm not even going to talk about the rejection here, because I'm talking about the failed moves in terms of the 200-week moving average at this moment in time. Now, with the next one, you can see had another failed move above the 200-week moving average. Bulls got absolutely out of bed for this. We came back down, back tested it, came back up, made a lower high, M pattern back down. We did not successfully retest the 200-week moving average. So over here, you had a failed move. Over here, you had a failed move. And with each of these as well, you can see this was a failed move equals a fast move in the opposite direction. So just another example of why these failed moves work on pretty much everything you're looking at. And once again, my friends, coming right down to it now, we've not cleared it. We've not back tested it. We don't have a volume confirmed breakout. We don't have, you know, I think we've got a weekly close. Yeah, we had a weekly close. That's all we've got. We haven't back tested it. So I'd like to see a back test. I'd like to see it coming back down here. Once again, 22,700, 22,800, and then a push to the upside. If that never happens, then we never had a successful retest of the 200 EMA. Now, wrapping up this segment, what I would like to do is specifically talk about the EMA ribbons. Now, a lot of people like to look at the Bollinger Bands and talk about the fact that when they constrict and when they get tightened, you normally are about to witness a very, very big move. If I actually bring up my my previous lines, if I just remove these, remove this, oops, remove this. I want to talk about the tightening, the times that we tighten on the EMA ribbon. So on the daily time frame, let's look at this. So you can see they were constricting at this moment in time, they were constricting at this moment in time, and they're constricting at this moment in time. Now, when the EMA ribbons constrict, you're normally getting ready for an explosive move. Hence the title of this video. There are a few other reasons why that we will dive into, but nonetheless, we're getting ready for an explosive move. The EMA ribbons are tightening, and let me show you the inverse of this. So if I get this green line here and I show you, let's look at regions where the EMA ribbons are very, very thick and far apart. So over here, you had a whole section where they were far apart. Over here, you had a whole section when they were far apart. And what did the price action do? A whole lot of nothing. We literally just trended sideways. Over here, we were just trending sideways. And once again, this shows you that when you do get these regions of extreme tightness over on the EMA ribbons, you're getting ready for a big move. Now, with all of these, you can see we came back up, retested the EMA ribbons when they were tightening, and we had an explosive move to the downside. We came up, made an M pattern into these EMA ribbons while they were tightening, explosive move to the downside. You can see we've moved up into these EMA ribbons while they're tightening, and it potentially looks like we're going to have an M pattern breaking down to the downside. Now, I would like to show both sides of the coin because, like I said, I mean, no decision has been made yet if we're specifically talking about the moving averages. Obviously, we're talking about multiple different segments that all have different things that they entail, but in terms of the moving averages, no decision has been made yet. So I wouldn't be bullish or bearish by simply looking at these moving averages, but nonetheless, I think we're going to be breaking down to the downside. That's my subjective opinion. We are currently sitting on the 200-week right now, so we're either going to have a very, very explosive move back up to the upside, potentially coming up to some of our, volume profile regions, like I believe 29,000 over on the VPVR. Up here at these regions, I mean, we can have an explosive move, 29, 28, 30,000. We can definitely have a massive move up to some of these higher price targets. I just don't think it's going to be in play. I think the next explosive move is going to be back down to the downside. I think we've got one last lower low before the bear market lowers in. After the next low comes into fruition for Bitcoin, so as soon as Bitcoin breaks back beneath that 17,000 kind of region, that's when I'm going to start getting extremely bullish, because that is when I think the bottom is in. I don't think the bottom is in yet. I still think another leg to the downside is in play. But once again, moving averages, no decision has been made. Keep your eyes on the 200 week, and also once again 13 EMA was tying up with this level, but 22,800, 22,700, around that vicinity is where you would really want to hold and see an explosive move to the upside from then. So let's move on from the moving averages and let's quickly talk about the MFI Fractal. Now, to start with, I'm actually going to remove all of the drawings because I want to talk about this in its most brutal effect, because we're currently witnessing the most one of the most brutal moves we've had on the MFI in quite some time. So if we look at this MFI Fractal, what we're looking at down here is the MFI. This is the money flow index. If you haven't heard of this before, this is basically like the RSI, but it's called the it's basically called the volume weighted RSI, where it also takes into account the volume and the relative strength. So it's looking at the relative strength of the market and also taking into consideration the volume. And subsequently, when the markets are potentially weak, but you've got a lot of volume flowing in at these overextension regions, the MFI says, hey, this is the time to head down to the downside. And you can see the most recent time where we surpassed this 80 level, or even when we came close to it, was back here. We had a double top on the MFI correlating to something like a triple top over on the price action. And this was one of the most, or it was, I'm not going to measure them all out for you because I did this to make the video quicker for you at the start, but I measured all of these moves to the downside out that we're going to look at in a second. But the most brutal move we had to the downside was this 47, almost 48% drop to the downside after this double top on the MFI. Now, take into consideration, you might be looking at this and thinking, well, we didn't really get nearly as extended as we previously did. And you would be right, but you do also need to take into consideration this move was from a MFI valuation of 19 all the way up to 89. Now the MFI started down here at 9. So it started at, 10 points beneath the previous move. So if we take something like an AB equals CD pattern, we're seeing if the move from A to B is equal from the move to C to D, and you can see it almost is. So what we know about this is this move was slightly more extravagant, it was more euphoric, it was more quick acting, but this move is very, very similar. And we're also extremely overextended at this moment in time when looking at the money flow index. Now, once again, I really don't want to take 5 minutes of your time looking at this. You can simply look at the price, look at when the price tops, and correlate it to the MFI. So you can see money flow index surpasses the heart line, comes up to a slightly overextended region, almost approaching 70, massive swing back down to the downside. You come back up, create a double top formation on the MFI. This is basically where you have 1, 2, 3 tops over here. You have a quick liquidity grab over here because you've got your highs up here. You come grab excess liquidity up here, and on the MFI you actually make a higher high, double top formation, failed move equals a fast move in the opposite direction, whatever you want to call it. We were super overextended and we headed back down to the downside very, very quickly. After this, we headed back down super fast for the money flow index. Obviously, the strength of the market was weak, but a lot of money was flowing out very, very quickly. I mean, you can see over here, you just rocketed down. So because of that, the money flow index bounced in the short term. We came back up to the heart line twice, and within these most recent retests of the heart line, you can see bounce back up to the heart line. The next move back down to the downside, you have a massive capitulation, bounce back up to the heart line. Price action is about to have a capitulation. Money flow index has a capitulation on the same time. Price action has a capitulation. And once again, we're at this region here. Forget about this, forget about this, forget about this. Look at where we are in terms of the money flow index right now. On the daily time frame, we are stupidly overextended. We're so far from the norm. We're absolutely, in my opinion, getting ready for a rocket to the downside. This is another one of the charts which is telling me in the lower time frames we're getting ready for an explosive move. And I think the next leg to the downside, because of this MFI overextension, is going to be absolutely brutal. So with that being said, we've looked at a lot of different things so far. We've looked at the FOMC fractals, the failed moves, the oscillators, the moving averages. We've talked about the money flow index fractals as well. Now let's move on to the stock market segment of this video before we do wrap up. So the first stock market index that we're going to be looking at is over on the Nasdaq, and for this I want to be talking about the double top trajectory that we keep on playing out time after time again. So what you'll notice over here is you have the all-time high for the Nasdaq. Now you have a double top here, you have a breakdown, you've got a top, double top, breakdown, top, double top, breakdown, and you can see to the bottom side of things, the Nasdaq just loves double bottoms. It loves double tops. For example, you've got a double bottom over here, run up to the upside, double bottom over here, run to the upside. So these double bottoms, double tops, they play out a lot. The Nasdaq stock market just loves double bottoms, double tops, diamond patterns. It's always the same stuff that plays out, dinosaur patterns nonetheless. And this is not where the confluence in the fractal dies. So once again, you've got potentially a third double top formation playing out. But look at this, you've got a top, you've got a lower low, you've got a double top, lower low, double top, or sorry, this is the first top, lower low, come back up, make a double top, lower low, first top, lower low, double top. What do you think is going to be playing out next? Probably another lower low, in my opinion. Now, from the most recent double tops, they subsequently yielded 17.36% drop to the downside. This one was a 25% drop to the downside. So if you take the average of the two, maybe potentially something like a 20% drop. I wouldn't say taking averages is your best way of estimating the move. Nonetheless, we'll be looking at the Nasdaq more in depth in future videos. This is just an interesting fractal that I see playing out in terms of the double tops. Now, let's move on to the VIX. Now, On my channel, I haven't previously talked about the VIX, so if you don't know what the VIX is, it basically says it up here. It is the volatility index for the S&P 500. The VIX is basically an index that represents the market's expectations for the relative strength of near-term price changes for, of course, the S&P 500. Now, how does it do this? Well, it is simply derived from the prices of the SPX. This is the SPX up here. We always use the SPY, which is potato. The SPY is basically the ETF derivative of the SPX. So once again, same thing. So once again, how does it determine the volatility in the market? How does it determine the next price swings? Well, it is simply derived from the prices of the SPX index options, allowing it to generate a 30-day forward project or projection on the volatility. So with that being said, as you can imagine, the VIX is negatively correlated to the SPX, also known as the stock market. So what you will notice is, if we do zoom out, let's look at more recent times just to make it a little bit more quick and concise. What you notice over here is the 2020 top in the March capitulation for the stock market. The top for the VIX. The VIX started to head back down to the downside. This happened while the stock market was bottoming. So VIX was heading to the downside, the SPY was heading to the upside, and then what happened? The VIX had a turnaround, you had a bottoming structure, you started to turn back up, and ever since then, you know, the VIX has been heading to the upside since here, and since here, the SPY has been heading to the downside. Once again, the VIX is a great way to determine, you know, what direction is the SPY, SPX, what direction is the stock market specifically going to be heading in the next couple of weeks or so. So with that being said, if we head over to the daily time frame, let's see what the VIX is saying about the stock market's next potential move. Now, what you'll notice over here is the all-time highs for the stock market, and this correlates to, because there's kind of like a double top formation playing out here, but what you've got playing out over on the VIX is you've got a low finding the start of this trend line, and then you've got a higher low. This is when this uptrend was solidified. We started to head to the upside, and ever since the VIX started to head to the upside, the second time we had this touch point solidifying this trend line for the first time, this was when the all-time high was in for the stock market, and ever since then stock market's been heading down. So look, once again, if we just simply focus on from when the trend started at the all-time high, you'll notice the VIX took another leg back up, took another leg back down, made a higher low. In this time, the SPY did the inverse. It headed back down, headed back up, and what do you notice? The local top was up here, another lower high, correlated to a higher low for the VIX. VIX headed back up to the upside, and it made a higher low over here. Although I specifically want to focus on the trend, but it is interesting to note that this higher low, even though it was taken out to the downside, coming back down to the trend line, this higher low correlates to this lower high, and this higher low correlates to this lower high. So even though the VIX was taken out to the downside on this higher low, which I really don't think is a big deal, because nonetheless we're still in a very, very nice uptrend for the VIX, this is perfectly correlated to the SPY. And what you notice is going on with the SPY is it looks like we're going to be starting to head down. We are steadily approaching resistance right now, and for the SPY, I really just wanted to keep it super simple. One line on this chart speaks absolute volumes. I really don't think we need to draw, you know, Fibonacci's, channels, chart patterns, all of that good stuff. And it's the same with the Nasdaq. You're noticing a lot of double top formations playing out. You've got a top here, potentially another double top here, double top here. And then this was kind of just like a rounding off phase. But nonetheless, what is going on with the VIX is in high correlation with what is likely to happen in the SPY. And just like we were looking at this chart of the SPY making lower lows and lower highs, this is what we're seeing here. You know, this is what crypto people are getting out of bed for. Another lower high on the stock market. We've got a very clear trajectory. We've got the all-time high, low, lower high, lower low, lower high, lower low, lower high. And just like we're seeing on the Nasdaq, where the Nasdaq looks like it's starting to roll down, I think the SPY is going to do that very quickly. So for the stock market indices, being the SPY, the Nasdaq, and also the VIX, they're all in correlation, and they're telling us, hey, the next move is probably coming very soon. It's going to be very brutal in my opinion. Now, on the 4-hourly time frame for the VIX, wrapping this up, You can see the VIX has had a beautiful bounce from this region today, and if we zoom in on the SPY, you can see the SPY is actually starting to head down while the VIX starts to head up, which is very nice. The VIX is up 7% today, 7.8%. That is a very nice move, and in my opinion, we're getting ready for a lot of continuation. The VIX is explosive. People, trading these options are very quick to change market sentiment. What you will notice is very often you'll find your bottom and you'll explode to the top. You'll find your top, you'll explode back down to the bottom, and it's very explosive. Kind of just like how the tops in the SPY are. Very interesting how the high correlation is there. Once again, I mean, just look at some of these explosive moves to the upside and look at how they correlate to a quote-unquote explosive move to the downside on the SPY. Bear in mind, I say explosive move, we're talking about the stock market here. This was just kind of long and dragged out, but for the stock market, this was very quick moving. So once again, looking at the Nasdaq, it looks like we're having a double top. Looking at the VIX is having a very nice uptrending level of support, which in correlation to the SPY, SPX, and pretty much all of the stock market, it should be indicative that this lower high is going to round down very soon, and we're going to be starting to head to the downside. So that is all I've got for you today, my friends, or it is pretty much all I've got for you today. We did all of that without even mentioning the fact that we've got a nasty Bart Simpson pattern, which is also a head and shoulders pattern. So if you haven't heard of Bart Simpson's patterns before, they're more or less what they look like. You've got this massive run to the upside, you got the spiky hair, and then you have a massive capitulation back down. I'm not going to go through the chart and find a bunch of examples to prove my point. I feel like this video is probably like half an hour already, so I'm going to wrap it up from here. But you can also see we've got a lovely head and shoulders pattern playing out at this moment in time. And in my opinion, or not in my opinion, I mean this is according to technical analysis, the next leg to the downside would be at 22,100. Interestingly, that price target rings a bell. This is down here, 21,200 is the next cluster on the VPVR. Do we have anything in terms of the moving averages? No, we don't have anything in terms of the moving averages, but nonetheless, another nice level of correlation. Head and shoulders, Bart Simpson pattern. In my opinion, my immediate short-term price targets. I said 21,200 or 22,100 for this one. Over on this chart, looking at the volume profiles, you've also got 21,200. So you've got 22,100, 21,200, and then coming down to this Bart Simpson pattern, if we have a retest and then a breakdown, you can definitely see a move back down to 20,700 for Bitcoin. That is all I've got for you today, my friends. I hope you did enjoy today's video, and as always, cowboy out. Peace.